We've got Kranthi Bathini joining us this morning, equity strategist at Wealth Mill Security. Kranthi, good morning. Pleasure having you back with us on News9. Well, yesterday was, of course, this momentous, remarkable day where markets had, in fact, flirted, if I can use that word, with the Sensex and the Nifty touching intraday their lifetime highs. But then we saw some correction soon thereafter. And this morning, again, a little flattish tone is what is visible on the charts. So, as per your understanding, looking at the charts this morning, what is the next sort of resistance that Nifty or Sensex would likely face before we can say for sure that the bulls are back?
Adi, good morning to you. Yeah, Nifty, we need to see to close decisively above 26,250. That's what the level we are watching for. By and large, markets are expected to be in a consolidation phase. We need to wait and watch how things are going to move in the next few days in terms of the government any reform news. That's what market has been waiting at this point of time, and also the trade deal has been lingering. We don't know when the outcome is going to come, so markets are in a wait and watch mode despite of the headline indices touching the all-time forming a new high. But also, Karthik, we need to also take into cognizance it took market 14 months to reach the new high. So look at the time-wise correction in the past 14 months in the headline indices. So one way we are having a time-wise correction, it's not the point-wise correction we had, but by and large, last 14 months have been, it's a stock-specific movement, what we witnessed on Indian markets. So going ahead, we have the Indian monetary policy, US monetary policy, and also the winter session of the parliament. We can expect some kind of a positive announcements towards the markets. That has been the market anticipation. And as we are stepping into the month of December, we are just nearing to the new year 26. As we are nearing to the year 26, markets are going to discount the earnings of 26 and 27. That's where the margin of safety is going to be for the market. So that gives a headroom for the market to rise further and increases the margin of safety in the market. So we can look forward 26,250. Market have to decisively close at this range. In the bottom level, 25,800. This is the level we are watching for the markets. But as long as markets are about 26,000 level, the medium to short term direction of the market is a positive territory.
All right, positive territory. You're looking at potentially market slipping, maybe not under 25,800, and the next resistance could be at 26,250 if markets close at that level. But something that is likely to happen after markets close today, Kranthi, is the fine print of India's Q2 GDP growth. Now, most analysts, most economists are expecting a print upwards of 7%. Now, if that were to happen, we have a 7.8% in Q1 and an over 7% in Q2. Likelihood that next week there are going to be revised estimates of India's annual growth forecast as well, potentially upwards of the 6.5% projected by RBI. What is that going to do to the sentiment of investors, especially foreign portfolio investors looking at the India growth story?
Yes, Karthik, it is a sentimental booster, definitely. As long as we maintain the magic figure of 8% growth, uh, the our shortcomings are forgiven, and despite of the global turmoil and anything, okay, if we maintain the same growth track, and if we touch the range of 8%, forget about the shortcomings and all. The entire the global space are going to look for Indian markets. So maintaining that range is crucial for the Indian economy. Still, we are the fastest growing economy in the world right now. So maintaining this growth momentum is extremely crucial. The measures that government is taking to increase the domestic consumption, that's going to give some kind of a support to the markets going ahead. Inflation is cooling off, which is beneficial. But the number where I am looking is the 8% growth. That's a magic number for India's market as well as the economy as a whole.
All right, 8%. Well, that's a big ask. Let's see if, if the revised projections come in line with your expectations, Kranthi. But looking at the charts this morning, I want to pivot now to the auto sector. And it seems Mahindra and Mahindra is the biggest gainer right now in the first few minutes of trading, coming on the back of the launch of its electric SUV, the 7-seater electric SUV, the XEV9S. And the commentary coming from the management on this launch also seems fairly positive, that they expect to sell about 7,000 odd units of electric vehicles every month by the end of this financial year. Now, what does this mean in terms of competition for Mahindra and Mahindra going up against Tata Motors, which all this while has been the leader in the EV segment? Does it seem now that investors are likely to pivot to Mahindra and Mahindra with the rise of its electric vehicle portfolio, as well as the robust sales numbers that it projects to reach?
Definitely, Karthik. Karthik, I want to mention one point. By and large, Indian auto market is portrayed as a entry-level car market. Look at Mahindra and Mahindra. They don't have any entry-level car. Everything is a mid-segment, and right now they are focusing on the seven-seater, that to electric. The way they position the portfolio of their products is the strength for Mahindra and Mahindra. That's where the outperformance is coming. And look at the stock price. Last 4 5 years, the stock has been a strong outperformer in the auto segment is concerned. Their portfolio is their strength, and not focusing on the entry level. They directly launched the mid segment, the SUV kind of our passenger utility vehicle segment. That's where Mahindra's core strength is going to be. The other companies have a diversified portfolio, whereas the Mahindra has been building where there are margins, where there are market behavior, where the disposable incomes are going up. That's what their strength. So I believe Mahindra and Mahindra are going to outperform in the coming years also. So any dip on Mahindra and Mahindra, I would love to buy my accumulate in a portfolio.
So a dip strategy, buy on dip strategy for Mahindra and Mahindra. Meanwhile, I want to shift focus now to the IPO space, because a big announcement that came yesterday, Kranthi, was the fact that Meesho has finally disclosed the dates as well as the price band for its IPO, December 3rd to December 5th, with the price band of about 105 to 111 rupees per share. Now, in the pure play e-commerce space, if you keep, let's say, Paytm, which at once upon a time ran the Paytm Mall, which was an e-commerce business, keeping that aside, we haven't really seen a true blue e-commerce listing in India so far, have we? So what does this mean for investors looking at the Meesho story and looking at the e-commerce story as a means to invest in?
Karthik, there is a heightened activities going on in the IPO space, especially in India. Many companies are lining up, and we have seen how the heightened activity during the lens cut and the recent listings of many of the IPOs. But with respect to the IPO investing is concerned, the new stocks we welcome these kind of new age business models, new business models. They have different modes and strong managements, but the valuations are the key concern for many of these stocks. But if I have to observe and analyze the IPO stocks are concerned, in the last year, around out of 100 IPOs, more than 70 IPOs are reached their listing price after post listing. So with respect to make any kind of serious investments are concerned in IPO stocks, I would be wait and watch post listing for next couple of quarters. But if any retail investor want to take the advantage of the listing gains, one can subscribe. But to make any kind of serious investments in the IPO space, there is no need of jump and buy or in a hurry. Just wait. There is a cool off period post listing, and one can get a comfortable valuations post listing at least after a couple of quarters. That has been the phenomena for many of these IPOs in the recent past.
Right. One final question on this, Kranthi, before I thank you for being here today, is the fact that Meesho is still reporting losses, unlike Lenskart, which had turned profitable a few months before the IPO was announced. Meesho has still reported losses of almost 3,000 crore rupees or so for the last financial year. What does this number really mean? Even though you're seeing growth and even though you're seeing the net merchandise value grow about 30%, you're still looking at a loss in the P&L statement of the company. What does that mean for the confidence or the lack thereof for investors?
One thing, Karthik, someone analyst have told, one of the small mistake the lens cart came up with declaring profits. So that's where the whole valuation theme went in on a lighter note. And coming to Misho, I'm not in a hurry to buy these kind of models, business models at this point of time. Always in profit, always in the business and stock markets. Ultimate aim is stock prices are slaves to earnings. So as long as the company becomes profitable, that is the ultimate aim of any business. It's not the market share; these are the crucial things. But at the end of the day, how much money you are making, how much profit you are making for a business. But these kind of business models, look at Eternal and many of these business models, they learn in a very hard way post listing becoming profitable. So that's where these companies are becoming and learning profitable, how to make the profits, reducing their overheads and consolidating their market share. They're learning, but ultimately the profitability is the key strength to any company. We are not going to invest any loss-making company. Ultimately, business means profits. So these companies, they are learning in a very hard way to make profits post-listing. After
Right.
listing, profits is the key.
Absolutely. So profitability, at least the path to profitability, if not that green mark on the P&L statement. Well, Kranthi Bathini, as always, pleasure having you here with us on
Thank
News9. Thank you
you.
so much
Thank
for
you.
your
God
time.
bless you.